Good morning. Thank you for tuning in. Today is Thursday, December the 18th, and we have a rally in the SPOOs. We can see here there's a gap open from yesterday's close. And since the market opened, which has been almost 2 hours now, it's currently 8:23 a.m. Pacific time. The market is sitting near the high of the day, and it looks like it's settled around a very tight range, based around 68.10 in cash. All right, so yesterday afternoon, I put on a trade that expires tomorrow. So it was a 2 day. I currently have 1 day left on it, and I started out by purchasing an out of the money call vertical. I went to the 68 handle and I bought a 35.40, and I bought that for a buck, and this was probably an hour or so before yesterday's close. The market rallied after I had bought the vertical spread. Remember, I bought the 35.40 for a buck, and I ended up extending it to a 10 wide. So what I did was I bought the 30 and I sold the 35, and that left me with 10 wide vertical between 30 and 40. All right, so after that, the market closed, and then we gapped higher. So this vertical spread has some value, and it's currently trading for roughly $4. Looks like $4, and my total cost was a buck 70. So what I did this morning is I made some adjustments, and the first thing I did was, let me do this. I'm going to open this up in another tab to make it a little easier to see. All right, so the first thing I did was I sold a 40.45 call vertical, and looks like I got a buck 30 for that. Let me verify that with my fills. Okay, so I sold a 40.45 for a buck 30. And that left me with the following structure. And note that selling it for a buck 30 brings my cost basis on the trade down to 40 cents, 40 bucks, and leaves me with the following. So I have the vertical spread between 30 and 40. And at 40, I have a 5 wide butterfly. So think of the butterfly as being centered at the 40 strike, and you go out to 45, there's 5 wide, and you go down to 40, 35, and there's the other part, the leg of the vertical. And in addition to that, I still have a 5 wide between 30 and 35. So that's why you have this extended region here between 30 and 40, and then you have the 5 wide between 40 and 45. So really think of it as a 5 wide butterfly, 35, 40, and 45, and you got an extra kicker here on the 30, 35. All right, so what to do with the market rallying? Something that I was considering doing, but it was a bit early in the day for this, as I wanted to go out and turn this into an unbalanced condor, and I was pricing out selling 2 call verticals for 50 cents, so to bring in $1. And something like that would leave me with the following structure, where I would end up having the unbalanced condor on for a credit. And normally I pay anywhere between 30 and 60 cents for such a structure. So note that I would have an unbalanced on for a credit. I was looking to see if I could maybe set this up so that my gap between this butterfly that I have here and the other end would be at least 40 to 50 wide. Now note that if I sell 2, this opens up risk to the upside, and the risk would total $500. I should be able to figure out why it's 500. Remember, I have 2 here, and I have 1 left over here, the 30.35. So that would leave me with $500 of risk on the upside. What I ended up doing, is the following. Okay, this brings us to the butterfly 4045. So I ended up selling one call vertical, and the strikes I used were 50 and 55, and that was done for $1.50. Let me verify that. Yes, 50.55 was done for $1.50, and that left me, or leaves me, I still have this position with $110 credit, $1.10. So the 30-40 10 wide vertical ended up costing me 170. Cost me 170, and then I brought in credits of 130 and 150. So now I have a total credit on the trade of $1.10. And I have the following structure. Now, sure, I would love this portion, this plateau here, to be wider so that I would have a $500 profit zone wider than it currently is. But I'm not complaining about it. I just want to bring up that point. Obviously, wider would be better, but you have to take what the market gives you. So again, the current structure is think of it as a 5 wide call vertical between 30 and 35. And then we have this butterfly here between 35 and 45, with the center strike being at 40. So that leaves us with this extra 30-35 call vertical. And I ended up turning that portion into a condor by selling the 50-55. So under this structure, we have a worst case scenario of $110 profit. We have an $1,110 bingo slot on our bingo card, and that's at the 40 strike. And then we have a plateau between 45 and 50 of $500, and then a descending profit zone between 50 and 55, with the worst case scenario being 110. If it never gets to this region, which is basically 40, it's 30 points away from this apex right now. The market's trading at 68.10. So if it doesn't get into this region by tomorrow, if the market doesn't continue to rally, then this trade could end up with the worst case scenario of $110 profit. But anyway, this is the way I started. This is what I ended up with, and it started with, again, a 5 wide. It was 35 to 40. 35.40 were the strikes. I bought that for $1. I extended it on a rally, so I made it a 10 wide, and then from there, I added on. I sold a vertical spread to turn a portion of this into a butterfly, and then I condored off the remaining 5 wide. You can think of it as between 30 and 35. I condored it off at 50 and 55, leaving me with a total credit of $1.10 and a profit 10 as follows. All right, I hope that was helpful. That's it for today. We'll see how this goes out tomorrow. Remember, this is at this point it's a 1-day expiry, and these are all the strikes, and we'll see what happens tomorrow. Okay, thanks for tuning in. I'll catch you guys next time.